Let's slow down and start from the higher time frame. Before looking at what price is doing right now, we need to understand what structure price is still carrying with it. On the 1-hour chart, the U.S. session on the 28th attempted to move below the lower boundary of the U.S. session reference from the 20th. Price did move lower. The attempt was visible, but it did not sustain. That detail matters, because failed attempts often tell us more than successful moves. When markets are ready to leave a structure, they usually don't hesitate after crossing a key reference. Here, price hesitated. Instead of continuing lower, movement slowed, and that tells us this was not acceptance. It was a test. After that failed attempt, price did not transition into a new range. It did not establish a new area of acceptance. Instead, price drifted back inside an earlier U.S. session range, specifically the range formed on the 27th. That shift is important because returning inside a prior range changes the question. The market is no longer asking, can price break lower? It is asking, will price remain trapped here, or is this range still being processed? At this point, nothing has been decided. Price is no longer breaking, but it is also not reclaiming. This is not continuation, and it is not reversal. It is containment. At the same time, on the higher time frame, price is still hovering near the weekly 120-period moving average. That level has not been reclaimed. It has not been lost. It is simply being respected. And when price spends time near a higher time frame average without resolving structure, that time becomes part of the analysis. So before moving lower into the shorter time frames, it's important to recognize where we are in the story. Structure has been tested. The attempt failed. Price returned inside a known range. Nothing is resolved yet. This is the context. The rest of the analysis has to operate within. Now that the higher time frame context is set, the question becomes more specific. It is no longer about whether price can break. That attempt has already happened, and it failed. The question now is what happens after a failed attempt. Does price quickly leave the area, or does it stay close to the level where the failure occurred? So far, price has chosen to stay close. After returning inside the prior U.S. session range, price did not immediately test new levels. It remained contained. That behavior matters because failed attempts do not always lead to immediate reversals. Sometimes they lead to hesitation. And hesitation is not neutral. It tells us the market is still processing information. From a structural perspective, price is close enough to key references to keep them relevant, but it is not interacting with them in a decisive way. This is where time begins to replace movement as the primary signal. Every hour that price remains inside this range, without expanding, adds weight to the structure. Not directional weight, but contextual weight. This is often the most uncomfortable phase for observers. Nothing is happening quickly. Nothing is confirming. But structurally, this is not inactivity. This is evaluation. The market is deciding whether this range is still valid or whether it is preparing to transition away from it. At this point, there is still no answer. And that absence of an answer is the most important information we have. To understand how this evaluation phase is unfolding, we need to move down to the lower time frame. On the 15-minute chart, the same hesitation we saw earlier continues to appear. but with more detail. Price moves, then pauses. It attempts to extend, then pulls back. This behavior repeats, and repetition, over time, becomes structure. After the failed attempt lower, price returned inside the prior U.S. session range and has remained there since. Movement is present, but it is contained. There are pushes away from the range, but they do not develop into sustained follow-through. That lack of continuation matters, because when lower time frames begin to resolve structure, movement usually becomes continuous. Here, it does not. Instead, volatility stabilizes. Short-term Bollinger Bands are no longer opening. They are flattening. That tells us energy is being held, not released. When markets remain in this holding state, the most important change is not direction. It is behavior. A change in how price interacts with familiar areas often appears before any larger transition. Crossing a level is not the same as staying there. What matters is whether price begins to spend time on one side of a reference rather than oscillating around it. That kind of behavior does not happen suddenly. It develops gradually through repeated interaction, where price stops returning to the same midpoint. During this phase, moving averages often reflect the uncertainty. Price tends to remain tangled with those averages, rather than separating cleanly. That entanglement is not noise. It is a visual expression of balance. When that balance begins to change, it does not resolve structure immediately, but it does signal that the form of weighting may be changing. For now, that transition has not completed. Price continues to spend time inside the range, near higher time frame references. On the 1-hour chart, price remains close to the weekly 120-period average. That level has not been reclaimed, and it has not been lost. It continues to influence behavior without producing resolution. This creates tension, but not urgency. The lower time frame is not leading the decision. It is reflecting the higher time frame question. As long as price continues to remain contained and volatility remains stable, the structure stays open. This is not a moment of confirmation. It is a moment of observation. And until that observation phase ends, there is nothing to resolve, only something to continue watching.